Hello and welcome to the first ever episode of Market Sunrise with me, Ramzan Karmali. We'll be checking out the latest market trends and news from London every morning so you can stay one step ahead of the game. So stick with me and let's own the morning. Today is the last trading day of the first half of 2025. Asian stocks closed higher, Europe starting the trading day on the front foot, and US futures are also pointing up this Monday. So let's get into the three things you need to know before that opening bell rings on Wall Street. For number one, we start in Washington. Senate Republicans pushed President Trump's big, beautiful bill forward on Sunday, and we expect voting to start this morning on a list of amendments. The measures put forward have been estimated to add at least $3.3 trillion to the nation's debt over a decade, adding to the current total of $36.2 trillion. Now remember, the president wants the bill to pass the legislation before the July 4th holiday. Now, secondly, tariffs are uppermost in traders' minds this morning. A deal to cut import tariffs between the US and the UK has come into force today. That should give British car makers preferential treatment to the world's biggest consumers in the market. We'll have more on this later in the show. Sticking with trade, and President Trump has also been speaking about where the US sits with Japan. In an interview with Fox News, he said that, quote, Mr. Japan was unfair on cars. He's actually floated the idea of keeping 25% tariffs on Japanese cars if a deal isn't reached by the July 9th deadline. President Trump wants Japan to buy more US oil. And our third thing to watch is also trade-related. Canada has scrapped a tech tax over the weekend in an attempt to advance trade talks with its neighbour. The digital services tax targeted US tech firms and was described by President Trump as a, quote, direct and blatant attack. On Friday, Trump said talks with Canada had been terminated, but those talks look like they will now restart. And all these tariff negotiations, the OECD has revised its growth forecasts recently, and I spoke to Matthias Cormann, the Secretary General of the OECD.
Well, look, I mean, the global economy had proven remarkably resilient all the way through to the end of 2024, despite some very significant challenges in recent years. But, what we have seen in more recent times is some of the data coming through, which points to a softening. And in particular, with the biggest issue really being the very high level of economic and trade policy uncertainty, which is weighing on business and consumer confidence, and indeed, which is weighing on growth.
Well, your downgrade for the world's largest economy, the US, was particularly severe. Growth of just 1.6% you predict in 2025. In 2024, the US economy grew by 2.8%. So is this all down to President Trump's tariff plans?
Well, look, I mean, certainly the global economy and individual national economies would benefit from a rapid return to economic and trade policy certainty. I mean, there's no question. I think it is now widely acknowledged that there are structural issues that need to be addressed when it comes to the operation of global markets, when it comes to the operation of the rules-based global trading system. But our key message to leaders around the world is talk to each other, work these issues through constructively and pragmatically with a view to make international trading arrangements fairer and work better, but while preserving the economic benefits of open markets and rules-based trade.
Well, President Trump actually has a deadline fast approaching for these trade deals to be done. How worried are you if they don't get done in the timeframe that he set out? How worried are you about the impact this would have on the global economy?
Well, firstly, I think it's very good that countries are talking, that the United States is engaging with key countries and key partners around the world to find agreed approaches going forward. I mean, and so obviously from our point of view, we hope that those conversations will be successful, as some of them already have been. I mean, there are some systemic issues that will need to be addressed. In particular when it comes to the resilience of global supply chains, when it comes to tackling unfair trade practices, market distorting activities, and the like, which create an unlevel and unfair playing field. But the key really is to pursue this in a way that is based on dialogue and on cooperation rather than on unilateral measures.
Now, one thing that the OECD pointed out was that inflation in the US could remain high as a result of these trade barriers and the impact it would have on consumers. So that would mean interest rates having to stay higher in the US for longer. But rates in Europe and elsewhere look like they're going to fall faster. What's the impact of this divergence in policy?
Well, all other things being equal, tariffs increase costs for consumers and for businesses that rely on imported inputs. And so, I mean, it is true that our outlook foresees like a slower decline in inflation, not just in the United States, in other parts of the world as well. But the upside opportunity is that if through dialogue and cooperation, some of these issues can be tackled in a cooperative way, then there is also good upside opportunity to strengthen the growth outlook and to bring that inflation level down faster.
Well, our trending tickers take us to China first. The country's blue chip CSI 300 rose 0.4%, hovering close to a 3-month high. That's despite fresh data that showed that manufacturing activity shrank for a third straight month in June, though at a slower pace. There was an increase in new orders, which could suggest that Beijing's support policies are taking effect. However, many economists believe this latest data could spur the Chinese government to deliver more stimulus packages to help encourage more activity and also fight against that uncertainty of tariffs. So let's move on to Switzerland for our second trending ticker, and that's UBS. The banking giant announced that it would buy back $2 billion in shares. The plan comes as part of a repurchase program approved at the bank's annual general meeting in April and is set to start tomorrow, July 1st. Well, despite the news, UBS shares were little changed this morning, slightly in the green, as you can see here, and are still trading around 5% down year to date, also due to uncertainty over its longer-term payout plans. And finally, let's take a look at Boeing. Shares closed up nearly 6% on Friday after the plane maker received an upgrade from some analysts. Bloomberg reported that Rothschild & Co. raised the price target to $275, up from $180. The Rothschild analyst said things seem to be taking a positive turn for Boeing, thanks to improvements in financials, culture, industrial process, and a better strategy. So that's definitely a stock to watch today. In 2025, Boeing shares have soared by nearly 25%. But Boeing is well placed to know that we live in an uncertain world. So what should we expect in the next 6 months of the year? We'll dive deeper into what's moving markets now. That's just after the break. So welcome back to Market Sunrise. So as we come up to the end of the first half of 2025, it may be worth taking stock. On the face of it, it looks like a bad 6 months for US stocks when you compare them to Europe and Asia. Look at this graph, for example. The S&P 500 trails behind both the Stock 600 and South Korea's Kospi. The latter has been boosted by increased demand for semiconductor chips and also increased involvement in crypto. But it's been a tale of 2 quarters. Take a look more closely at the last 3 months. Wall Street's comeback from tariff turmoil has significantly closed the gap with European stocks. Those betting on the end of an era of US exceptionalism may be having second thoughts. The S&P 500 has jumped 10% in the past quarter. That's more than Europe's Stock 600, which is up around 2% over the same period. Yes, year to date, it's a different story. But between the start of April and now, the S&P 500 has beaten most major global indexes. This all seems to confound the theory that President Trump's chaotic tariff policy would force investors to look outside the US, and perhaps Europe would be the big beneficiary, especially as hopes that there would be a big spending splurge in the region on infrastructure and defence. But big tech in the US has staged a bit of a comeback driven by Nvidia, which hit a record high last week. We'll have more on that later. And it's not just the big tech names leading the fight back. The likes of Palantir and cryptocurrency exchange Coinbase, which has more than doubled since the start of April as well. It's fair to say there's been a bit of turbulence on Wall Street since President Trump returned to the White House. Whether that continues, and sorry to sound like a bit of a broken record, has a lot to do with the trade deals that still need to be negotiated. Now, before we move on, let's take a look at what's driven a strong 6 months for Bitcoin with Inez Ferre.
Yeah, and if we just take a look at where Bitcoin is at, year to date, it's up 13% since President Trump won the White House last year, though it is up roughly 50%. So you really see the boom that has happened in the Bitcoin space, given President Trump's promises for a crypto-friendly framework. So you've had a lot of regulatory tailwinds this past half year. You've had also the executive order that President Trump signed to start a strategic Bitcoin reserve. And you've had companies that have really benefited from this. I'm going to pull up a year-to-date chart so you can see the biggest beneficiaries. Robinhood up 122%, the trading platform. Also, you've got Coinbase that is up more than 40%. I do want to mention that even though today we saw Coinbase pulling back from its record close, this stock has seen a turnaround that is impressive. You've had this stock that was at its lows in 2022. It has emerged from those lows up more than 900% since then. And you've had a lot of bullish calls around Coinbase, with one analyst earlier this week calling this company the Amazon of crypto financial services. Also want to mention that Coinbase is a minority stakeholder of Circle. This is the company that went public earlier in June, on June 5th, and Circle is up year to date, well, since its IPO, almost 500%, 480%. This is the issuer of stablecoins, and the stablecoins are digital tokens that are backed by assets like the US dollar. And Wall Street is very bullish on this entire stablecoin market because they are seeing a large addressable market. They are saying that this is going to revolutionize the way that payments are made, especially when it comes to cross-border payments. And we've seen a lot of deal making in this space as well. We've seen companies that have wanted to get involved in the stablecoin space. And it's interesting because issuers of stablecoin, you've got Circle, and then you've got Tether, which is privately owned. That as far as Circle is concerned, it is a pure play when it comes to stablecoins, and they're a big buyer of short-term debt, U.S. Treasuries. So this is a very important link between the government and also these issuers of stablecoin, because they also drive some of this demand for U.S. Treasury bills short-term.
And as, before I let you go, what can you tell us just quickly about the risks that we should think about associated with adopting stablecoins?
Yeah, I mean, you've had a couple of analysts that have talked about these risks you've got increasing competition on the heels of the Genius Act that was passed in the Senate. It's expected to be finalized by the end of this year, so it'll pass through the House and also will be signed into law. And so that's expected to go through. But then with that, you're going to have increased competition. And then on top of that, the other risk is that if you have interest rates coming down, then that is going to impact the reserve income that a company like Circle makes, because it invests those dollars into U.S. Treasuries for its stablecoins. So that'll have some type of an impact. Some analysts that I've spoken to say that this means that they are going to have to gain more market share, grow faster, and perhaps go into other products as well.
So for our chart of the day, we're going to look at a more traditional currency. We're going to be looking at the pound against the dollar. Well, after hitting multi-year highs against the dollar in recent days, the pound is roughly flat today in sort of wait and see mode this morning as a trade deal between the US and the UK comes into effect. The deal, which was announced with great fanfare by both governments, makes the UK the only country to be exempt from 50% tariffs on steel and aluminium, announced by Donald Trump earlier this year. But there's a catch. Despite pledges from Donald Trump and Prime Minister Keir Starmer to reduce those steel tariffs to zero, the steel industry is still facing a tariff of 25%. And there are still a number of questions about what may happen next. The two winning industries for the UK might be automotive and aerospace. The trade deal saw tariffs set at 10% for automotive exports, down from 27.5%. While for the aerospace industry, 10% duties on goods like engines and aircraft were removed today. Now, back to the pound. The pound is up about 9.5% in 2025 against the dollar. It's the highest level in more than 3 years. But analysts say it has more to do with the dollar's weakness rather than the pound's strength. Investors have been fleeing the dollar in the current climate of uncertainty, and the greenback has fallen even more against the euro than it has against the British pound. So against the euro, the UK's currency has actually lost more than 3.3% since January. Now, if you're thinking about investing, you need to know that analysts are divided over the growth prospects for the UK and its currency. On one side, some say the pound has more room to grow after being held back in recent years by bearish forecasts. GDP numbers just dropped and show that the UK economy grew by a promising 0.7% in the first quarter. Now, on the other hand, the government is facing major budget challenges that may stifle growth, along with an exodus of millionaires due to recent tax rises. And of course, the uncertainty posed by US trade policy adds to the downside risks. Now, remember, that trade uncertainty is a big reason why investors have been looking to diversify away from the US dollar. So, to fully understand the dynamic at play in the Forex and currency markets, we need to look at the big picture. My colleague Jared Blikre breaks it down for us in this explainer.
With global tensions rising, there's a lot of chatter about the US dollar, which has been the world's reserve currency since just after World War II. And today we're going to look at exactly why currency and foreign exchange tickers can look so strange and what their charts are actually saying. I'm Jared Blikre, host of Stocks in Translation. Now, here's something curious behind me. Check out these two charts from the past 5 years. Maybe we'll get to that in a second. We have the euro-dollar pair, whose symbol is EUR-USD equals X. There we go. And the US dollar index, that's DX-Y.NYV. These are a mouthful, but notice that they're mirror images of each other. The other one moves up, but the other moves down. So why do these symbols look so different, and what's the history here? To answer that, we need to define what the so-called Forex market is and take a quick trip back to the 1970s. So foreign exchange, or Forex, that is a 24-hour global marketplace where banks, businesses, and traders, they swap one currency for another. It sets the exchange rates affecting your vacation costs, import prices, even your investment returns. And it all started August 15th, 1971, when President Nixon closed the gold window, ending the era where foreign governments could convert dollars into gold. By 1973 on this timeline, this led to the collapse of the post-World War II Bretton Woods Agreement. And suddenly, exchange rates that they had been fixed, they were moving quite widely. So in 1976, the Jamaica Accords officially legalized and recognized floating currencies, which had already been trading somewhat freely for years. And in 1979, Europe launched its own monetary system to manage volatility. This led to the formal creation of the euro decades later in 1999. So those events shaped the modern Forex market that we see today. Now, what exactly should you know about Forex? First, every currency quote has two sides, the base currency first and the quote currency second. And which one comes first is simply a matter of convention that goes all the way back to the 1970s. Take the euro versus a dollar. Each currency in this pair always has three letters that do not change. So EUR is a euro and USD is a US dollar. Yahoo Finance also adds an equal sign and an X to the end. That highlights that these are Forex pairs. Now, the current price of the euro dollar is about 1.15. This means that 1 euro buys $1.15. And bottom line, the euro is just a little bit stronger than the dollar. Also, the smallest increment in Forex is just 1/10,000th of a unit, 0.0001. And this market never sleeps during the week. It runs nonstop from Sunday evening all the way to Friday afternoon. And some other fun facts. Forex is the biggest market on the planet with an eye-watering $7.5 trillion in daily turnover. Also, it's famous for high leverage. Traders will often borrow 30 to 100 times their money. This means that relatively small daily movements, they can have a huge ripple effect. And when they're big, watch out, because that volatility in currencies, it can quickly spill into the markets we know well, like bonds and stocks. And finally, the US dollar gets most of the action. It's on one side of 88% of all trades. The euro is second, appearing about a third of the time, and the yen is next with about 1/6 of the action. That was Forex. Now let's talk about the dollar index. What exactly index? The index part is key, and a currency index measures the overall strength of one currency against a weighted basket of others, so there are many. The most famous is the DXY, or the so-called Dixie, which you can see in this 5-year chart. Its weighting is determined by the euro with nearly 58%. That's why DXY mirrors the US dollar, the euro-US dollar Forex pair so closely, but upside down though. And here's a fun fact. The DXY basket has not been updated since the 1970s and is based on lightly traded futures contracts, which makes it a bit of an antique. And there are several alternative dollar indices, including some by the Federal Reserve, but despite this, the DXY remains an industry standard in an archaic relic that we still tend to use every day. And that's your currency crash course. Now you know why Forex matters and can look so strange even if you never place a single trade.
So our call of the day is tech focused. Now, believe it or not, as a collective, and I mean a collective, the Magnificent Seven stocks, Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla are pretty much flat year to date. In contrast, Chinese tech firms are up around 20% in 2025 so far. So does this mean investors should shy away from these big US tech stocks? Well, it would be pretty difficult to argue against those Magnificent Seven though. Take Nvidia, for example. It's up over 17% this year alone and trading around the $157 mark. Now, numerous analysts believe that still makes the stock seriously undervalued, with many targeting $250 a share. Also, in May, these mega stocks roared back into life, having their best month in 2 years. However, it certainly seems wise to take a closer look at Chinese tech stocks at the same time. The recent rise in the share price was spurred on by DeepSeek's artificial intelligence breakthrough. Chinese companies like Xiaomi, for example, are also making great strides in electric vehicles. But there is one major risk looming over all these stocks, and that's whether a meaningful trade deal between the US and China can be reached. So thank you very much for watching Yahoo Finance and watching Market Sunrise. Have a fantastic rest of your morning, and we'll see you again at the same time tomorrow. I'm Ramzan Karmali. Stay tuned. You've been watching Yahoo Finance.